Briefly into the world of tech and markets. This time last week, Jumia, the Africa-focused German-incorporated e-commerce platform, floated depository notes on the bourse in New York. Now, this, at the time, was the explanation from the company's co-CEO, Jeremy Hodara, on why the firm chose to raise capital in New York as opposed to any of the capital markets here in Africa.
So we chose New York because we felt this was a place where the investor had, the most experience and the best understanding of both building marketplaces and also operating in emerging markets. And since we are building e-commerce in Africa, we felt this was a natural place to list.
Now that investors do seem to love the company for first week of trading is anything to go by. Take a look at this chart. Jumia's shares peaked at just over $43 on the 16th of April. Solid trading volumes too. 2 days later, they closed about 12% lower, just over $35. Upon its listing, this company triggered a fierce debate on what constitutes an African company. Just look up the hashtag #JumiaIsNotAfrican for the details on that particular debate. Now, we will cover that angle in detail in just a moment, but let's lay out the key numbers for the firm. It operates in 14 countries in Africa. By end 2018, just over 4 million clients were using it. It had close to 30 million product listings across all of its platforms. Now, goods and services worth nearly $950 million were sold across those platforms last year. That's over 60% more compared to 2017. But remember, this is a company that's never posted net earnings, much less an operating profit. Its consolidated loss in 2018 was nearly $200 million, and that was 3% higher compared to the year before. Revenues by end 2018 were just under $150 million, and that was 28% higher compared to the year before. So earlier on, I spoke to Ali Kansatu, CEO of Rich Management. With a week of trading behind us, I started by asking him why New York, and not Lagos or Nairobi or Johannesburg for that matter, was the ideal place for Jumia to raise capital.
Well, I wish I put money to work on that trade. I was pretty convinced that it would perform well. Look, there's so many dynamics at work here. Firstly, they have a first move advantage, e-commerce, Africa. They've actually been on the ground. They're in multiple jurisdictions. We know that they've accumulated losses of $900 million. They're not profitable.
They collected a $1 billion valuation along the way somewhere.
Yes. But when you take what I think we're looking at today is what the economists called blitz scaling businesses. I call them the platform economy.
Isn't Jumia in itself a bit of a contradiction? Because as you say, yes, you're playing onto these trends, right? Africa, population of a billion people.
Younger
population, explosive internet access, and so on and so forth. But then you look at the metrics of the business itself. You put in a loss of about almost $200 million in 2018. You've got 4.1 million clients across 14 countries.
Yes.
On a per capita basis seems relatively small. So
yes.
On one hand, you've got all these interesting trends at the top end, but actually making them profitable, that's a whole different story.
I mean, that's a whole different story. Execution, the devil's in the detail of the execution. These are complicated jurisdictions. We all know they have their own quirks, so it's no easy task. And when people talk of like a $1.2 trillion economy and all these consumers, we're not consolidated. We're still very fragmented. The market is not like a similar market somewhere in Europe where everybody's consolidated and it flows much better. I agree with you, but I think we're going back to this sort of unicorn type valuation, first move advantage. Sure, that your numbers are right, but what is the target? The target is possibly 1 billion people. And the target is establishing yourself in minds of, let's say, 200 million people before Amazon or before Jack Ma wake up.
They chose New York to raise capital.
Yes.
And one of the arguments we've had in the course of the week is, in as much as you describe yourself, in this case referring to Jumia, as an African company, why aren't you listing in Nigeria? Why aren't you listing in the JSE? Why not list in Nairobi?
So firstly, I think it was quite sophisticated investor relations to select to click yourself as an African company in the righteousness of Africa. I think that resonated well, particularly in North America, where people have not had an opportunity to invest in the new economy on the African continent, so you were tapping into that demand.
But that is a bit hypocritical, isn't it?
Well, I think,
Because I mean, it's German listed, people in Dubai, a Clyde and the German
You can
law.
also say that we live in a flatter and flatter world, and that's how business in the new age is going to be conducted. It doesn't have to be conducted purely by Africans for Africa. We should look at these models where we tap into human capital wherever it might be.
Well, that would be fair if there was a level playing field for everyone who's involved
That's
in
another
raising
point.
capital.
That's another point. And okay, so we've got two things. We've got the situation as we find it, and we've got the situation that we want to get to. The situation as we find it is there is not huge amounts of capital to back these types of businesses on the continent. The actual capital is sitting mostly in Silicon Valley, who've had experience in investing in these sorts of businesses, seen what they can generate, and that's where the pool of liquidity lies. So if you were a Jumia, you would not go and waste your time trying to persuade the South African pension fund investors at the JSE on a model about which the closest they've got to, they've not seen the success of that model. So I think for now, they had to go there. That was an economic imperative for that company.
Was this listing a defensive play, putting themselves in New York and saying, hey, you guys have the capital, we've got access to a market that none of you are in, we've got local expertise, we've got local data. If you want a piece of this pie, we're the guys to talk to, buy us.
That comes back to the point I was making earlier. You've got to create the right vehicle for the circumstances, right? You can't do it differently to where the market is telling you to go. So the liquidity is sitting there. You know there's an appetite for this kind of business. You are on the ground. So absolutely, you're making it as easy as someone walking off the street and says, okay, I believe in that. Here's a check for $5,000-$10,000. I'm going to buy some shares. So yes, it is defensive. It is defensive in that sense. It basically puts you in front of probably the arrival of Amazon and Jack Ma's Alibaba, and makes you possibly a takeover target as well. So yes, I think it's multidimensional, but it was they did it right. They picked a good moment in the markets when liquidity for this space was at a record. So absolutely, you've got to admire them for their execution and timing.
Where's the value in this company? Because, again, going back to the metrics, haven't made a profit in the years of operation.
They're probably going to spend another $500 million.
Yeah, they're going to spend a ton of money here.
Yeah, or maybe another $1 billion.
But looking at the business in its current form, right, ignoring what it might be in the future, with what they have in hand, 81,000 sellers, 4.1 million clients, 14 countries, and it's pretty diverse. North Africa, East Africa, so that's Kenya, Uganda, Rwanda, Tanzania, West Africa, Nigeria, plus, of course, Francophone Africa, Cameroon, Cote d'Ivoire, a few other places. It seems to me, correct me if I'm wrong, that the core value here may not necessarily be anything else. It's the platform and the data that comes along with it.
This is a platform economy trade, right, and data trade. In an asymmetric Africa, when you compare it to any other continent, they're going to have more data on more people. And you assume, although those numbers are small now, you'd assume it's going to be like a virus. If you're betting on it, you're betting it's a virus, that it's going to spread like this, and the numbers are going to increase exponentially. And that's exactly, and what is the most valuable thing in this whole 21st century economy today is data.
The investment case for Jumia there. Now, let's move on to something else.